Okay, perfect. So the way we're starting this call or starting this session, we're going to start as if we have a $10,000 account balance. All right. I asked the question to everyone, what would be an amount if they were to take a trade, what would be an amount that they would be okay with risking? Basically everyone kind of stuck in between the 1 to 5%. So 1 to 5% of a $10,000 account. Can someone tell me what that kind of range is? Like, what's the actual price range? What's 1 to 5% of $10,000? Somebody already answered it, but I just want to re-ask. What is
So 1% would
to
be $100, and 5% would be 500.
perfect? So as we know, right? I don't know why I'm taking a while. Okay, perfect. So an account balance, which is $10,000, right? You only let's go ahead and make sure we update that correctly. So risking risking 1 to 5%, right? And 1 to 5% of $10,000 is $100 to $500. Now, usually when if we're looking to risk between 100 to 500, what will be like your risk to reward ratio? Like, what are you aiming for anytime you look to take a trade? What is the minimum risk to reward ratio that you I ain't gonna say should have, but according to what we teach and what we informed you guys on, what is the risk to reward ratio that we always recommend
One
per
to
trade?
three.
One
One,
to
two,
three.
three minimum. Perfect. So 1 to 3 risk, 1 to 3 risk reward minimum. All right. Because think about it. If you lose two trades and you win one, you're still in profit, right? Lose two trades, win one, you're still in profit. But if you lose three trades, you know, of course you lose three trades, you're down, but you can literally lose two trades and win one and still be in profit if each trade that you take is a 1 to 3 risk to reward minimum. All right. So count balance 10,000, risking 1 to 5%. $100 is 1%, 500 is 5%, and you're doing a 1 to 3 risk to reward. So that just means if you're risking 100, you're looking to make 300. If you're risking 500, you're looking to make 1,500, right? It makes sense. All right. And if you trade with this mindset, you will be in the game for a long time. It'll be easier for you to trade and you won't be all over the place psychologically. You know, over leveraging is what kills most traders, and it's easier said than done. You know what I'm saying? Like it's so easy to get caught up in over leveraging or adding additional entries into a trade that you were already, let's say, already at max risk, and now I didn't get a good entry. Let me re-enter the trade again. Now you're over the risk amount. So it's really important that you want to stick with the 1 to 5%. So let's say I'm going to give Euro USD, right? Just
Oh,
a
so
regular
is the
currency
end
pair.
recording?
Yes, I'm recording.
Okay, thanks.
No problem, bro. So the currency pair, right? Let me go ahead and notate that for those who don't know. The currency that we're gonna, look at, or according to this example that I'm giving you guys, is the euro versus the US dollar. All right. So with that being said, Euro USD, right? Let's say we were looking to trade the Euro USD and we saw, going to give you guys like a little quick little example, then we're going to get into the charts. Let's say we saw the market kind of going in this direction, right? Market was doing something like this. You guys tell me what type of trend this is.
Uptrend.
Uptrend. Perfect. So in an uptrend, what type of trades do we look for?
For the buys.
For the buys. What types of structure does an uptrend give you? Let me
Low,
start y'all off.
higher lows and higher highs.
Higher lows and higher highs. Good job. All right. So I'm giving y'all risk management along with a little bit of technical so you can understand this example that I'm about to give you guys. Right. And then we're going to tap into those charts. Right. So, of course, we have here a low, a high, a higher low. What's this right here, guys?
A higher high.
That's an HH.
Hi- Higher high. Perfect. And of course, we have another higher low. And I know you guys know this. It's literally repetitive. We do this all the time, but that's what the market is. It's nothing but repetition. And once you get the hang of it, you know what I'm saying? It's easy. Right. So as we can see, we have a low, high, higher low, higher low, higher high. If we're looking for buys, right? When would be the best time for us to get into a buy if market just created a new higher high?
You get in at the higher low.
Perfect. At a higher low. All right. So let's say market came and did this and created a new higher low, right? We did not break below this higher low. So since we did not break below that higher low, if market creates a higher low here and doesn't go below here, that's a good chance, a good opportunity to say that we can continue on with this upward trend, right? In order to confirm a trend, you need at least two touches on the trend line, which this is a trend line. You have one, two, and as we drag that, you can kind of see it there. Of course, it don't necessarily, right here we kind of broke below it a little bit, but we didn't break this structure, so we can still confirm this to be a higher low, market to create a new higher high. Okay. Now, that's just an example I'm giving you guys. Now, for what we're focusing in on, the currency that we're looking at is Euro USD, right? Let's say we look to enter the market, right? We were looking to enter Euro USD for a buy, and we were just waiting on the higher low to happen, right? Let's say if we enter here, okay, and where should I place my stop loss, guys? Who knows? Where should the stop loss be placed here? Without me getting into the full strategy and drawing the fib and everything, where should your stop loss always be placed for buys? Let me see who know that answer. I got some of y'all stuck right now. If you don't know, say I don't know or drop it in the chat. Say IDK.
I think on the previous higher low,
Perfect. Who said that?
Briseida.
Let's get it. Perfect. So buy guys, you want to place your stop loss at the previous higher low. If market has confirmed, let's say market confirmed this, let's say market went up like this or whatever, and it confirmed that we just created a new higher low right here. Okay. If this is a confirmed higher low, if we're looking to enter here, we need to place our stop loss below the previous higher low, right? If we're entering at this new higher low, the stop loss goes below the previous higher low. Because if market goes below this area, then guess what? If market breaks this higher low, it's probably going to continue going in the opposite direction. All right. So as long as market decides to respect this higher low, the previous one, we're good to continue on buys. Now I want people to understand this. In trading, you're going to get wins, you're going to get losses. Like you can't, it's going to happen, right? You can't avoid those, right? All you can do is make sure all of your confluences align for you to continue on with the trend. And sometimes the market may go the opposite direction. And guess what? You have a stop loss to protect your $10,000 of your capital in your account to not take out all of your $10,000, just 1 to 5% of that trade. Okay. So let me not jump ahead of myself. I want you guys to understand that losses are going to happen, but you want to protect yourself by following your rules. Your stop loss goes below the previous higher low. All right. Now, in this case, we're looking for a buy, right? So let's say we were looking to buy and we wanted to place that. I wouldn't recommend placing it directly below it. I would say give it a little breathing room because we know how market likes to kind of wake us out sometimes or try to attempt to hit your stop loss. Typically, I like to wait for market to, do his little thing, do his little liquidity sweep, will play around however it chooses to do before entering. But for this example, I want to give you guys the exact like thing to focus in on. So of course, stop loss goes below the previous, you know what I'm saying, higher low, right? And let's say we actually place it. You guys give me a stop loss here. If this right here is about 13 pips, right? Right at the higher low, right below here is about 13 pips. What would you guys feel comfortable? Actually, let's focus in on this. If the entry is here and stop loss goes below here, below this higher low, we know that the take profit has to be at the higher high or somewhere a little bit above the higher high, which we're looking for market to kind of create that new high, right? And as we use our fib and kind of see right here, um, according to our fib, this is where the new higher high should be at this negative 27. I'll give this example because it makes sense right here. But let's say we were looking to go 1 to 3 risk to reward. Um, if we know, let's say about 70 pips, just to round it off, because this says 69, I'm going to go 70 pips, 70 pip take profit, right? As y'all can see, this says zero point 0.7. Oh, let me put this on a charger. Okay, cool. Sorry about that, y'all. So as y'all can see, this is about 70 pips at this new higher high. If market decides to create a new higher high, if I decide to place it below here at the 0%, that's about 50 something pips. Okay. So let's say we go for a new higher high. We want market to create a new higher high because we're in an uptrend. We just created a new higher. We should expect market to create a high. Now, in that case, if we're going for 70 pips, right? Think about it. If your reward is 70, what should our risk be? If we're looking to make 3 times as much as our risk, what makes sense here? If we're going one, let's say we're going 1 to 3, we just want to do 1 to 3 to be safe. If the reward is already 70, right? 70 divided by 3. Basically, that's just the basic math right there. All you got to do with this tool in particular is just drag this down until that's too far down. Until it gives you a 1 to 3 risk to
Should be
reward. And right here you
there
have it.
about 230, 225, 230.
hmm So now you have about a 23 pip stop loss for a 70 pip take profit. That's a 3.05. So that's in the realm of 1 to 3 risk to reward. Taking that trade right there. Let's expand that just a little bit so you guys can see. Right. So again, your entry is at your higher low. Your stop loss is below the previous higher low, not the current one, the previous higher low. Right. Because market can play around in this area all it wants. The market can literally decide to come here, come all the way down here before going up. Okay. So it's good to have that stop loss in placement because the market decides to come here, then we can probably imagine market continue going down unless it decided to do some type of liquidity sweep and then go back up. It can do that too. Market likes to violate. But for this example, I want to make it simple for you guys. All right. So again, a stop loss of 23 pips, a take profit of 70 pips. All right, now let's do the math, guys. Let's do this here. So in this case, if we were looking to enter this trade, right? Our entry sits at, and this little white line right here, to the right, it kind of tells me that my entry is at 98.704. This is literally DXY. So I'm going to put it in terms of if it was um Euro USD. That's probably why it's like that because we're on the DXY. 98.704. That's more of like JPY pairs with the double digits and stuff like that, with 3 digits to the right. But Euro USD and other forex pairs have 4 digits to the right of the decimal point. So I'm just going to give you guys this example, but I'm just going to add zeros to it in this case. So let's say I'm just go DSY just to make it make sense. Just put DSY. That's what we sit on. I mean, of course you can't trade a DSY, but we have to trade a currency pair. But for this example, I'm just going to give you the numbers because it's all kind of the same thing here. All right. So our entry price on the DXY, can't spell today. Sorry, guys. All right. The entry will be 98.704. 98.704. All right. our stop loss, right? So in order for us to get the stop loss, all we're going to do is do 98.704, and then we're going to figure out what this stop loss price was, which was here. So that's 98.704 minus 98.586. So 98.586. Okay. If we did the math here, right? I want y'all to understand the way this works is you're going to literally just do subtraction here. All right. It's going to be 98.704 minus 98.586. That's going to be, oh, sorry, 98.704 minus 98.586. So that ain't right here. I did my math wrong. 98.704 and 98.586. All right, let's just do regular math here. 704 minus 586. Two. Am I tripping? Yeah, I'm tripping. I got this line right here. My fault, y'all. It's this red line, not this one. I was wondering why it won't looking right. All right, this little red box right here is for this stop loss. My apologies, guys. So it's actually 98.474. 98.474 would be the stop loss according to this right here. So here is the stop loss, here's the entry, and here's your take profit up here. All right. So let's do that again. 704 minus 474, which is 23. All right. So that's negative 23 pips. All right. So a negative 23 pips stop loss. All right. And the take profit is literally from your price, from your entry price to where you're actually going to. Right. So all I'm gonna do here is just do my my take profit, which is 99.406, 99.406. And we already know that's, you know what I'm saying, 70.2. We already kind of got it up there to show us 702. That's literally 70.2. All right, so I'm gonna just do the math for you guys. So let's do take profit 99.406 minus 98.704, and that's 70.2. Right? So let's just do 70 pips. And we don't really gotta worry about the point two at the end. You just round it off. So 7 pip, big profit. That is a 1, 2, 3 risk to reward. Now, here we go, guys. My question for you all now is if we were looking to take this trade, okay, we want this is our one and only trade. We have a 1 to 3 risk to reward. Someone tell me how much we're looking to risk on this trade. We're only going to risk between 1 to 5%. So someone tell me a number. Give me a number between 100 and 500. How much we were wanting to risk on this specific trade if we were to take this trade.
500.
100, 100, 1%, 100.
Okay, I heard 1%. I heard 500. I need one more number.
I'd
Come on.
say I'd say 300 to make 900, to potentially make 900.
Okay, cool. All right. So we had 100, 300, and 500. I need an agreement on what number we're going to use.
If you say you're risking 1% would be 100.
Okay. So y'all want to do 1% on this trade? Everybody cool with that?
Yes.
Okay. So we're going to risk 1%. Can't type. All right, cool. So we're going to risk 1%. So we already know that's $100. I cannot spell or type one. All right. So risking 1%, which we already know equals 100. All right. Now, here's the tricky part. So a lot of people get confused at. If we have a 23 pip stop loss and we only want to risk $100 on this trade, what lot size are we going to use?
I'm gonna test you guys. I'm listening in the background.
What did you say, Ron?
I'm testing them. They should know the answer to this.
This one of the Ron calls right here. Give me what lot size? I want y'all to do the math right here. We got a
Point
23
Point
pip
point
stop.
43.
0.025. 0.025.
Okay,
Roughly.
let's do the math here. Okay, so 0.025. Is that a $2.50 lot size? Because 0.25.
No, 0.025. I think. Yeah.
Okay, so how much money per pip is that? One pip equals what? If you use a 0.25, one pip is how much? I don't think we can use a 0.025. I think you mean like $2.50 per pip, right?
Yeah,
I
roughly.
think I think we can go for points 43,
Point
something like
43.
that.
Okay, so that's four
That
dollars and thirty cent. I don't even have it. The lot size chart. All right, I'm gonna make one for y'all right quick. Okay, so 0.01 equals 10 cents. Boy, if I type wrong one more time, I'm gonna crash out. 0.05
Yeah, I'm gonna give you guys
or
quick tip here. How many pips is the stop loss?
23.
Okay, and how much are what dollar amount are we risking? $100, right?
Yes.
So divide 100 by 23.
Yes, I did that, and it's
And what does it give you?
4.3. So we can do
Okay.
the lot size
So that no
0.43.
before you say that, what's that 4.3 represent?
The amount of dollars?
Yeah, per pip,
$4.
correct?
Yes, per pip.
So now that you guys know it's $4.30, what
Yes.
lot size gives you $4.30?
I think 0.43.
Hang on.
Thank you, Ron.
And then let's do the opposite. If you guys are risking $300 and you're doing 23 pips, what would you do? You would go 300 divided by 23, correct?
Oh yeah, so
Yes.
0.23 that size.
Well, before you get that, what's 300 divided by 23?
13.04. $13. 1.3.
Exactly. So what would the lot size be?
1.3.
There you go, guys. It
uh,
doesn't have to be
right.
exact as long as it's as close as possible to what you're trying to risk.
Mhm.
You
Perfect.
see how when you
So
simplify it, it makes it that much easier to understand. Sorry, I just wanted to.
no, you good, bro. Perfect. What person better than do this risk management, bro? So
Right?
you
And
good. I
the
appreciate you.
reason I'm showing you this, right, is because if you're spending too much time and you're overcomplicating it, it's too easy to make a mistake, right? So whatever your price is that you want to risk, divide it by the amount of pips you have, and it'll give you the cost per pip. Once you know the cost per pip, you know what your lot size needs to be, as close as it is up or down. So you could either risk like $101 or like $98. It might not necessarily be exact.
Perfect. So let's do that, y'all. If we have $100 that we want to risk and we have a 23 pip stop loss, so let's do 100 divided by 23. That's 4.3. It's really 4.34, but let's just be safe and say 4.30. All right. We're gonna round it off. So let's say we use a 4.30 lot size. No, that's definitely not what we're using. If we use
The
a
4.30 is the dollar amount per pip.
mhm. So basically it's gonna be if you were to put it into your MetaTrader or your trade locker or whatever you're using, it'll be 0.43. I don't know why. cannot type tonight. So 0.43 will be the lot size that you use. And basically, you're just moving this decimal place over one. That'll be 4.30, which is $4.30. All right. So $4.30 times 23 is 98, right? So that means your stop loss would be a risk of 98.9. Bro, it's this keyboard. 98.9. $98.90 is how much you're risking on this trade. Well, let me put lot size. So, and then you take profit. Well, let me put profit. Let me not put stop loss risk, right? To make sure I make it simple and make it easy for everybody to understand. So risk, profit. Let me use loss instead of risk. The P&L, right? So profit and loss. So your loss would be a $98.90 loss, but your take profit, 4.30 times 300. Oh, geez. Sorry. 4.30 times 300. That right? I'm tripping. It's not, hold on. 98.
Just do it the easy way. Just go the pips times
296.70.
11.
Yeah. So 296.70. So it's close to 300. 296 is, hold on. Let's way down here. Or your profit, right, will be 296 dot 70. All right. Does that make sense, guys? On this example that I'm giving you guys. Does this make sense? If not, I do not mind explaining, going over it. Any confusion, please let me know. Speak now or forever hold your peace. Nah, do not do that.
I want to
Okay,
add
any
one
question?
other thing for any of the new people. When you guys do your calculations, the price might be a little bit different depending on the currency that you trade because it does do like a conversion of like what your currency you're trading in to the pair you're trading. So like if you're trading DJ, it might be a little bit different because of the conversion of the Canadian dollar, the US dollar, or whatever currency you're trading in. So it
Definitely.
might
Like
be a
JPY
little
pairs.
bit different.
Yeah, those JPY pairs have 3 digits after the decimal point, while the other currency pairs have about, I think it's 4 digits after the decimal point. So it might be like point.
Oh no, I'm actually talking about the actual dollar amount. So like, when you
Oh,
place
okay,
the
okay,
trade,
okay.
the dollar amount that shows up, it might not be exactly 296.7 or 98.98. It might be like 96.6 just because there's a conversion rate
Oh,
of
yeah, okay, okay.
what the currency is. Just so that if you guys are like, why is the number different? That's why. But it gives you a good, basically 99% chance close evaluation of what it's worth. Because this is just as important, guys, as doing all the hard work so that you know how to risk that money. That's all. And I appreciate you, Zay, for putting that in there.
Absolutely, bro. So if y'all will, feel free to take a screenshot or you post this in the chat. You know what I'm saying? For everybody that, not just maybe not on the call, take a little screenshot, throw it in the beginners chat, advanced chat, whatever chat you're in, so everybody can have access to that before we move forward. But
So now that we have
um,
13 people, I'm going to just do one quick test. If we're risking $50, what do you guys do? We got
are you
13
asking like
people.
how they get like
Someone's
a
got a
lot
key
size?
cut. Yeah,
So
like if you're risking.
it will be 0.21.
Okay, just tell me the steps that you would do to figure it out. I want to know if we're
Oh,
risking $50, what would you do?
you divide the 50 by the 23 pips, you roughly get your idea of your lot size.
Perfect.
Yeah, and then you look at what is 0.1 equivalent to how much dollar it's equivalent to, and so on, so on. Yeah.
Awesome. As long as you guys are understanding the steps on how to do it, that's what's important, right? Because it shouldn't be a guess. Once you know it, it should take you 30 seconds to figure it out. And then there's no like mistaking it or going, oh crap, I'm risking less than I wanted, or I'm risking more. That's all.
So no
And then
questions
another
about this,
other
guys.
actual quick tip: if the last digit confuses it, just always put that last digit as a zero. The little piplet's not going to make a huge difference. So you could go 98.700 for the entry price or whatever your entry price is, but your stop loss could be 90 could be like just rounded to the zero, right? Because your stop loss is 98.474. It could just be 470 and then 400, just to make it, just to simplify it for people.
Yeah, that's what I usually do. I usually just round my stuff up sometimes.
Yeah.
Might go 99.41 or I might go 99. I mean 98 point, 48 or something like that,
I always
It all
just put a zero.
depends.
I always
Yeah.
just put zeros just because then it's for me the pennies don't make a difference.
Oh yeah, you talking about for the pipette. I'm talking about like for the actual pip, not the pipette.
Yeah, the
Yeah,
piplet I just
zero,
put a
zero for
zero.
sure.
Yeah.
Yeah, it'd be 48 and it automatically it wouldn't even be existent. We know that's a zero or 41, you know what I'm saying? Or just 40, it all depends. But yeah, and then that'll be, just 7-0. So yeah, for sure. We don't really care about the pipette. I don't even want you to even get the last digit. Don't even let that throw you off. Just go zero like Ron said. That don't matter. But yeah, any questions about this, guys? Are we good? Drop a one in the chat box if we straight, we good, we understand. Drop a two in the chat box if we got questions. Sorry. Sorry. I see one.
Hey
We got
guys,
about
I want to mention something for you guys. Even if you guys can't speak, if you guys can at least participate by putting in ones and twos, it just goes to show us who's actually paying attention to the calls, just so that, we can kind of because we try to want engage, right? Because this engagement is for you guys. So the more you guys engage, it'll make us know that you guys are paying attention to the information. That's all.
right. Cool. All right, got a good amount of ones. Like I said, if you were two and you're not comfortable putting two, feel free to message me privately on Telegram. Well, I got you. So no worries.
Or myself, I'm
Um,
always here to help also, guys.
yeah, don't message me. Message Ron. I'll take that back. I'm just kidding. I'm just kidding. I'm just kidding.
Well,
Either
to be
either one
honest,
of
I'm
us. Me,
a bit
Ron,
more
me, no, all of
available,
us.
guys. So please don't hesitate. We're all here to help.
Absolutely. Absolutely, guys. I don't mind at all. All right, cool. So we just got a risk management. Guys, no matter what your account size is, whether you have $100, $20, $50, $100,000, stick to using the risk management of only 1 to 5%. You know, that like I said, that'll preserve your account much longer than you just risking half of your account or, I don't want to get into that. But 1 to 5 is that'll do. Point blank period.
And
1 to 5% will do.
if your guys' account is over 100,000, you could be risking less than 1%. You could be risking less than 1% to make 1%, right? You could be
Right.
risking $300 to be making 1,000, right? And that's perfectly fine because you get 4% trade risking that. That's still 4 grand risking a matter of like $900. So as your size goes up, you can risk less than 1%, guys. That's okay.
Yeah, well, my funded account, I don't even do 1 to 5%. I might do like 0.25 or point, you know what I'm saying? 0.50 or something like that. Not even like a 0.5% or 1/4%. I don't even do that much. I don't really see the needs. And then of course with the rules and everything. So you don't even go that high, no more than 1%. But anyways, glad we got that. Everybody straight on that. Um, yeah.
I got a question here. How do I what time frame would I look at for if I'm doing intraday trading for support and resistance?
Um,
Or even say
Personally,
the session, you know?
you
Yeah.
said what time frame would you look at for what again? Intraday trading?
Support. Yeah, support and resistance, you know? Yeah. Want to determine that session support and resistance, you know, or previous session support and resistance, so on.
Honestly, I have a document that I've dropped in the chat. I'm not sure if anyone can just redrop it if you have access to it. It tells you whether you're a scalper, intraday,
Yeah,
day
I saw.
swing,
Yeah,
position
yeah,
trader. Okay.
yeah.
Okay,
Okay.
perfect. So I would
Yeah.
say I would say in all honesty, regardless if you're an intraday or a day trader, your main focus should go to the daily time frame just to figure out which overall direction the market is in. Then I would highly focus in on the 4 hour structure, right? I would focus in on the 4 hour structure. So what I would do is, and this is me because I trade intraday style. I go to the daily, I determine the trend. After the daily, I go to the 4 hour. I'm only trading 4 hour structure here. So I'm looking at 4 hour highs, 4 hour lows. Based off of that, I'm going to mark that 4 hour high, mark that 4 hour low. Then I'm going to look at the 1 hour time frame, right? When I'm doing a 1 hour time frame, I need to figure out which direction is the market moving in on that 1 hour. Hopefully, it's still aligned with the daily. And let's say if I'm looking at a higher low on the daily and I'm looking for market to go create a higher high, if I get to the 4 hour and I see that, oh, we're still at a higher low, okay, perfect. Then I go to the 1 hour and we're at that higher low. I'm looking to so basically I'm looking at 4 hour structure and I'm entering off the 1 hour uh time frame. I might even drop down to like maybe like a 15-minute time frame for the entry after like we got the liquidity sweep or something like that. But for me, I'm looking at 4 hour highs and lows because I'm targeting that 4 hour high and low. Or I could be targeting the 1 hour. Right. It really depends on how long you're looking to hold the trade and how many pips you're looking to get off of that trade. You can trade any time frame, just pay attention to the highs and lows. Let's say if, for example, you already look at the daily, it's an uptrend. You already looked at the 4 hour, it's an uptrend, and you're at higher lows or you're at a low point. If this is the 15-minute, right, the same thing applies. If this is the 15-minute time frame, right, and this is the 15-minute high, this is the 15-minute low, and then you look for market to come back and retrace, you're probably now looking at like a 5 minute or something to look for the entry, right? Let's say if this is the um fib with the 61.8 and everything you're looking for, I'm pretty sure understand that your take profit and your stop loss is going to be very small. Or I'm not gonna say small, but it's not gonna be like a whole lot of pips because you're looking for a smaller move. So maybe you might catch like 30 pips or 50 pips. You know what I'm saying? Something quick and easy. And you're gonna be risking about for 30 pip move, you're probably gonna risk like 10. 50 pip move, you're gonna be risking about 15, less than 20, something in that nature. Right? Um, in this case, it kind of will look something like this. And you're looking for a higher low to happen here, right? And then you're looking to, why does this look like this? Maybe because we in a, oh yeah. So you're looking for something like this to happen.
Can I give them what I usually do?
1 second, give me 1 second. Let me finish this and I got you, bro. So let's say if you got the 15-minute low, 15-minute high, right? If then what you want to do is you want to see where the market is kind of giving you that entry. You want to see market create these lower lows. And now you look like if this is the 15-minute low, 15-minute high, you're gonna go to the 5 minute to look and see what structure is giving you. Hopefully you have like a 15-minute fair value gap or some type of uh confirmation right here that's giving you that higher low, that 61.8. And you literally have to target this 15-minute high or a new higher high on the 15-minute. You're still following structure, but everything is the same on each time frame. You just cannot be like, oh, well, um, if this is the 15-minute high and 15-minute low and the daily high is way up here, you can't be like, well, I'm just gonna hold this trade all the way up here to this daily high, but the daily high and low is literally sitting right here, but you have a stop loss right up here. Like you're probably gonna get stopped out because you're looking at a daily. You have to respect whatever time frame you're entering on, respect those. highs and lows of that time frame, if that makes sense. Like you can't be trying to hold this trade as a swing trade when you're looking off of the structure of a lower time frame. Does that make sense?
Yeah. Don't you
So if
also look at the minutes? Well, the minutes is more valid if you're looking at goals still. I mean, those other forex peers, I don't think it's worth looking much at the minute. But I mean, at least for goal, the I think it's kind of important you look at the minute chart for entry, technically.
good, but I'm not gonna lie, I never ever in my trading career looked at the minute candle like the minute chart for any entries.
Oh,
I think that's more of a scalping type thing. I never really even did the 5 minute. I'll say the lowest I ever went was a 15 minute because I go 15 minute, 1 hour, 4 hour if I'm looking for like a quick day trade, intraday type trade. I think looking at the 4 hour structure and then the 1 hour and then a 15 minute entry should be perfect, because if you get in higher highs and higher lows on that 4 hour and then the day on the 1 hour, you're getting the same thing. And then you want to look at the 1 hour for like what type of patterns you're getting. And then you could possibly look at the 15 minute because the 15 minute might give you something where this 1 hour is a higher low, but you're still getting uh lower lows and lower highs on the 15 minutes. So once the 15 minute breaks a lower high, then so you could be looking for that entry on the 15 minute because now you done broke a lower high. All you gotta do is wait for a retracement to come back at where you broke out from. And this 1 hour is still a higher low right here, but the 15 minutes giving you confirmation that the bulls are now in control. Now the 15 minute, you can go ahead and take it up while what I'm saying the 1 hour is here. 15 minutes showing you that it's no longer going bearish. You can wait for a retracement and get in. Like I'm gonna have to show you more on a candlestick chart than just show you like blindly like this. But I would
yeah,
say what you probably want to focus in on, bro, is no matter what, like I don't care if you intraday trading, day trading, swing trading, look at the daily first, then shift to the 4 hour for structure, then look at the 1 hour for any type of confirmations, um, gaps in the market, liquidity sweeps, and then you could probably go 15 to 1 hour for entry, in my opinion, if you're looking for intraday. But yeah, I hope that
yeah,
kind of answered a little bit.
yeah. Sure, it does. But one thing I would
Okay.
say though, I mean, if you're entering on a 15 minute, they're normally larger candles, so therefore, you possibly your stop loss would be much wider. You know.
Um, I mean, it really depends. Like, it depends on where you're looking to enter the market. Like, I personally like to enter a trade at a support if I'm looking to buy it. So, if I'm looking to enter here and there's no type of support here, then I need to wait until market is at a support to actually take it. So, let's say
Okay.
if I'm looking to enter here, there's no type of like support structure or nothing that confirm market can reject and push up, then guess what? I'm gonna wait and for market to come to this area, you know what I'm saying? And then once market comes to the area, I'm looking for something like this. Maybe like a nice little sweep, back above, retrace, and then I'm looking to enter, you know what I'm saying? To take it up for the buy. I will wait for something like here, right here. I have no support to be entering here. But when I look here, oh, I have nice support here. I have something for market to reject off of. Let's say market does decides to sweep this area, but then comes right back above it and breaks back above. I'm looking for like a nice touch again to show me that I'm going to stay above this area, place my stop loss below here, and take my trade going up in that direction. So, like I said, like it don't really don't matter like what time frame you look at when you're trading, it just has to make sense on each time frame. Just like we look at the daily 4 hour, 1 hour. If you was to go to the 1 hour 15.5, as long as you follow those same rules, you'll be fine.
Can I give a simplified version?
Sure, bro.
So remember that if we're swing trading, we use the weekly to get overall bias of what the market's doing, whether it's an uptrend. Just to kind of give us an idea, we use the daily as our actual like real time. Is it an uptrend or downtrend? And then we use the 4 hour and the 4 hour for structure, and then the 1 hour for entry. If you're doing a day trade, you're going to be using the day. The day would be the equivalent of the weekly. Then it would go 4 hour, 1 hour, and usually a half hour entry point. An intraday trade would be like the daily, the 4 hour. So the daily would be kind of like the weekly. The 4 hour would be the daily. Then the hour would be like you're trying to find your entry point, and then the half an hour or 15 minute would be the confluence of like, okay, waiting for that candlestick to break. What you're asking about gold, and you keep wanting to bring it down and down and down, what you're trying to do is you're trying to justify scalping in your head. And Can anyone tell me what the reason why we look at higher time frames and not the minutes? Can anyone tell me why we do that? What is the main purpose of it?
Determine market direction structure
No,
for
it's to
swing trading.
eliminate the noise. Because when
Yeah.
you're doing the 1 minute, the 15 minute, you can't. You're not predicting what the market is doing. You're gambling on what the market's going to do. You're not getting a true representation of what's happening within a minute. Let's be honest. So the reason why we don't do that, I'm not saying you can't scalp, but we're not going to justify scalping here. I'm going to be honest. You ask this question all the time on every single call. Okay? I'm not trying to be mean or anything, but we do not condone scalping. But what we do will work on any time frame. The other thing that you need to be curious about is if you're doing a 1 minute and 5 minute, your pip counts are going to be so low, but to make that same margin, you're probably adding 3 times the lot size because you're trying to make what you would do in a day in 15 minutes, right? These are things that are going to get you guys in trouble and blow your accounts. I'm just being honest. If you want to do it that way, do it that way, but we're not going to justify how to scalp. But the time frames matter on how you're doing. But the reason why we do it is you want to eliminate noise. You want to actually have a true representation of what the market is doing, and the way we do that is by looking at the overall picture, right? So if you're intraday trading, you're literally using the daily as your weekly confluence. The 4 hour would be the equivalent of your daily. So you'd go daily, 4 hour, 1 hour, and then like the 30-minute or 15-minute for entry. Anything below that, you're scalping.
And I definitely won't recommend that. And like I said, it works for some people. You know what I'm saying? I'm not against it, but I just don't do it. So it's like I can't tell anyone how to properly scout because I don't scout, you know.
But
Um,
all right, for example, today, gold did make roughly a 700 pip move, right?
mhm.
Technically, you can look at those pips as a sort of a swing trade pip, right? But if you were in it, I mean, you have a number of TPs, you can turn a scalping trade technically into a swing trade. You can start off as a scalp and move off in a swing trade technically.
Okay. Uh, Not necessarily because if you're scalping, in order for that trade to make sense, like when you're trading from one low. If you're selling, you're trading from one. Can't even get my words right. Basically, what I'm saying is you're trading from one structure to the next structure. If you have lower highs and lower lows, what to say lower lows, that's crazy. Lower highs and lower lows. When you get another lower high, you're looking to target the next that previous lower low. Like you're looking to target that level because you don't know if market's going to continue going. That's the same thing that we do when we're day trading or swing trading. We're going from one swing low on the uptrend. We're going from one swing low to a swing high to a higher low, and then we're going to target that high. So if you're scalping, you're just targeting the next level or the level you just retrace from, basically. So you can't say, oh, I'm gonna turn this scalp to a swing trade because that's not how you technically kind of marked it up. Like your swing trade, you may place your stop loss at some small little bitty lower high, and then next thing you know, you get blasted out of it because you're trying to hold that trade or take that trade as if you marked it up to be a swing trade. Like if you're gonna swing, if you're gonna scalp, scalp. If you're gonna intraday, intraday. If you're gonna day. If you're gonna swing, swing. Because you cannot place a stop loss at a small piece of structure on a lower time frame because you were gonna scalp and then expect that market to reward that. That's not the type of position that you were supposed to be getting into. So I don't want you to get in that mind state of, let's say, if Mino calls a swing trade and you're looking to take it as a scalp, and you know what I'm saying, you get what you're looking for and it hits your level on that 1 minute chart, and then all of a sudden you end up losing the trade and everybody else is still in it. You're like, damn, I lost the trade. Why did I lose? Because you kind of didn't follow the way that he marked the chart. He marked it up as a swing. You took it as a scalp. So you had lower time frames. You put it at a small, lower high, you got stopped out. Everybody's still in the trade. You know, I hope that makes sense. Like, I don't know, maybe I gotta get like a visual to it, but if you're scalping, scalp. If you're intraday, intraday. If you're swing, swing. If you're day, your day. Like, make it make sense. Don't try to overcomplicate it. Don't try to incorporate a scalp into a swing. Like, trade the market as the market gives you the market. Like, don't try to make up your own thing. You know what I'm saying? That's going to make it very hard for you to understand how to trade. And I'm not going to lie, swing trading is very, very complicated. It's very, not swing trading, scalping is very complicated, right? You got to have crazy lot sizes to even you get 5 pips. You got to have like a crazy lot size to really make some money off of it. You know what I'm saying? And just add up because the market moves really fast. And the 1 minute don't really give you like true direction. It just give you candlesticks and just different colors, bro. So I mean, I'm not knocking it. If scalping works for you, that's great. It doesn't work for me, so I don't do it. But don't try to turn a scalp to a swing or a, you know what I'm saying? Unless
I
if
have
you
a question
entered the
for
trade or you're supposed to enter that. Absolutely, bro.
German. I'm trying to
Yes.
understand your mindset, right? So, is there a reason why you're kind of trying to, build your own strategy per se, build, your own scalping strategy, knowing that, hey, there's a system that can help you get to the destination that you're trying to get. And as you can see, the system does work. Obviously, we take many losses the last couple of weeks, but that overall, over a long period of time, the system will help you get to the destination that you're trying to get. Is there a reason why you kind of like not really putting that much attention into the system, like Ron said, because you love asking a lot of scalping questions, but you don't really ask too many questions about the system that they go over or I go over? Is there a reason why you're trying to build your own scalping strategy per se, or you just you like getting quick in and out?
Well, I do believe in the swing trading system because I see where it's beneficial, especially when you have that 1 to 3 risk reward ratio. I see where it is sustainable. But I I admit I do like some aspect of scalping, especially as it relates to gold, because I see where you can make some money of that in a short order of time. Because yeah, sometimes I don't always have the patience to be waiting a couple of days to just to move 50 pips, something like that.
Okay, so good question, but you say you have the patience to wait for a couple of days, right? And also, we do not just swing trade. I call day trades all the time. They call a lot of intraday and day trades all the time. So we just like we don't recommend scalping at all because for one, the stats is already against you, right? For swing trading, I think it's 7% to make it. For day trading, it's 5% to make it, 3 to 5% to make it. For scalping, it's even less than 2% to make it, right? So you going for scalping has already put you in a major disadvantage, stats wise, right? So you gotta be able to, look at the stats and trust it. That's first and foremost, right? And you also said that you do not like waiting for 2 days to make 50 pips or whatever the case may be. But when you do go to work, you work for 8 hours. Do your boss pay you the following day or the next day?
I see what you're saying. Yeah, you have a pay period, of course. You gotta wait a couple of days, of course, right, or a couple of
So,
weeks.
so do you get paid every 2 days at your job?
No, 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 no.
So, okay, so if on average you're waiting 14 days after you done put like what, 80 hours, right? 80 hours, 40 hours per week, 80 hours in 2 weeks. So you have to put in 80 hours up front, right? For you to get paid after 14 days. So if you say a swing trade that can give you 5K or even 10,000 in 14 days, why not just apply the same mindset?
Yeah. Oh, I got caught in the scalping thing was that when my account was low, I was looking for a way to build back the money, and it actually worked, but I got caught up in it too much, and it actually took it back. So I know the disadvantage of scalping, but um, I just figure if you can refine your skill, you can be better at it too, as well as be a swing trader also.
Yeah. So I get what you're saying, but what I'm trying to tell you is one, the stats is already against you. Second, like Zay said, you're looking to catch 5, 20, 25 pips, which means you're going to be over leveraging by using a big lot size, right? And then third is that you're going to have to be in front of that screen or the computer for you to click the sell, the buy, and for it to be in and out quick. And it's just like it's just too much going on, right? Just I would say stick to at least if you don't like holding your trades for too long, I'd say try to start intraday and work your way up to day trading at least. I wouldn't recommend anyone to go less than intraday, to be honest, right? Because me, I focus on day trading and swing trading, mostly swing trading, right? I've tried it all. I've tried scalping before. I mean, you're pretty much gambling. Like you're on the 1 minute time frame, hoping for the next candle to be red or green, which is crazy.
Yeah, well, generally still, I don't go for less than 100 pips, or if the least 70 pips. But generally, if I'm doing scalping, that's what I go for technically.
You go 100 pips for what, currencies or gold?
Gold, but generally, I aim for much more than that, but minimum 100 pips.
How much are you
really?
risking? If you're going for 100 pips, how many are you risking?
Well, most times I risk, yeah, it's probably 70 pips maybe. Yes, about
You're
70
risking
pips.
70 to make 100?
Yeah, I know it doesn't matter, but
Now my next question is how much are you risking on that 70 pips? Like how much money? I don't need to know lot size. How much actual money? What's your
all
average?
right. So on average, probably about 20
$20
yeah,
to make what? 20?
to make maybe 30, but most times I aim for 40. But it depends on how the market is moving and what it's if it's not moving as well. I mean, you got to take what you can get, but you can't
Okay,
always.
and how much in positive are you? Are you in positive or negative in your account?
I'm a negative in my account, so I've been trying to fine tune.
Okay. What percent by negative?
Repeat that.
What percent in negative? So if you have $1,000 or $100, what percent? Are you down like 20%, 30%, 5%?
Well, I'm done much more than that.
Well, how much? I'm asking you.
All right, say I'm doing 50%, less than 50,
So,
greater than 50.
so,
Yeah.
so what I wanted to ask you, and I appreciate your honesty. Like I say this stuff just to point this out, and this is going to help other people understand it. So I hope you guys are also listening to this because he's very transparent, and I appreciate him being this transparent. Right? The strategy you're doing is not working, so you're getting the fast money, but you're losing it just as quick. You're doing a 1-to-1 risk to reward ratio.
Well, most times I aim for the 1 to 2
But you're
or 1
down
to 3 the most.
50%.
That's because I just started it. I'm new at it, so I guess I'm
So
not good at it.
what I want you to realize what you're doing right now. Okay, I'm giving you the truth. Okay, I have to give you the hard truth. Is you're making excuses for yourself to justify what you're doing, and you're looking for us to give you the oh, it's okay, you're doing the right thing. I'm going to be honest, you're not doing the right thing.
But if all
There's
right,
no
yes,
but.
say yes, it's wrong to do 1-to-1 or even less than that.
How is
But
this helping you? No,
but
honestly, how is this beneficial? If
but
if you were on the other end and someone was telling you this, would you tell them that that's the right way to do it?
I would say it's better to. I do agree it's better to swing trade. It's less stressful.
No,
It's
no, I'm not even
easier.
talking about swing trading. I'm just talking about your risk to reward ratio, whether you're scalping or not. If someone were to come up to you and ask you a question, be like, "I'm risking this," would you tell them that if you were on the other side and someone was telling you this, would you tell them that they're doing a good job and that they should be that what they're doing is right?
Well, I would. I'm aware that is a higher risk and a higher failure rate for
No, that's not what
scalping.
I asked you. I'm asking you,
So I would
is if
advise
I was
them
asking you
in
this
the same
question
manner.
or your brother was asking you, would you tell them that what they're doing is right?
I would just advise them of the dangers. I wouldn't kind of determine for them. They have to determine if it's wrong or right. I wouldn't want to dictate that to them, but I would just
No,
kind of
but if
encourage them.
you were looking at like, okay, do you have a wife?
Yeah.
If your wife came to you and says, "Hey, I'm doing this. This is what I did," and you looked and were like, "What are you doing?" Would you say to her she's doing the right thing?
Well, as at this point in time, I see the benefits of both. So I would not say it's totally wrong. I wouldn't say that. I would say that the odds are up against you more for a scalper and less as a swing trader. But as a swing trader too, you need more capital because when that stop loss get hits, it hits you hard. How I got into it initially was trying to
You're
recover.
missing my point. It's not even about you scalping.
Yeah.
Do you catch what I'm doing? Do you see what your biggest mistake is? Your risk to reward ratio is a 1-to-1.
Yeah, but that's rare in rare cases. Most time is
You
one to
just told me
two.
on average you're looking for this. I'm going by what you're telling me. I'm not putting the words in your mouth. You're telling me, and I'm giving you feedback,
Oh. Most times
right?
if it gives me just 50 pips or less, I wait it out for the 100 pips generally to
You want to,
150 pips.
so if you're risking 100 pips, right?
No, generally I don't. Roughly about 70 pips or so, even sometimes
But how big is
depends
your
on how the
TP
market
usually?
is moving, if I'm positive on the direction.
What is your average TP? How much is your take profit? How many pips?
100 on average, 100 pips.
So then on average, your stop loss should be 33 pips, not 70, not 60, not 90. It should be average 33 pips.
Well, the rules for forex pairs as opposed to volatile pairs
No, it's
can be
not
different.
rules to Forex. It's rules to risk management. I don't care if you're trading gold. I don't care if you're trading feathers, rocks, carrots, oil, 3-to-1, 1-to-3 risk reward ratio, or at the minimum 1-to-2, not a 1-to-1. How is that going to help you succeed and get ahead in this game long term?
That's why I'm
You can't
working to
look
find.
at it for the moment. You got to look at, how am I going to succeed 6 months from now? How am I going to be able to succeed from a year from now? Yeah, will it take you some time to grow your account from drawdown? Yes, it will. And the first thing we said is you're not going to get rich quick making this, but the moment you get the skills and you're able to compound your money, your guys are going to see the growth. And if I don't tell you this and nobody tells you this, then we're to blame. At the end of the day, it's going to be up to you guys whether you take our information and use that, right? But when it comes to a risk management side of it, I don't care what strategy you guys used. But if you're only risking 100, looking for a take profit of 100 pips, you shouldn't be risking more than 33 pips. But then again, in gold, that's way too tight. 33 pips comes and goes in a second.
Yes, for sure.
So then how does the scalping strategy work so that you're going to make money? You're gambling. You're literally playing blackjack, putting on black or red or roulette, and then all you have is black, red, and 00. There are no other numbers. And I'm
I
not
hear
trying
you,
to be
man. I
hard. I'm
hear
just
you.
trying to give you some feedback. So I'll regress from this. You take this information as you will. Please know that it's not to hurt anyone's ego or anything. I just need you to understand where I'm coming from and where Mino's coming from and Zay's coming from, right? And it's going to be up to you to take this information and understand it, right? Because we want to see you guys succeed, and the last thing we want to see is you guys blowing your accounts left, right, and center because nobody told you this. And so whether you want to take this advice, it's completely up to you, my friend.
And I want to double back on that, you know. And Jermaine, I definitely appreciate you for taking the time to ask your question. As I always say, no question is a dumb question, no answer is a dumb answer. And these conversations that not only you might need to have had, but other people on this call as well, because um, everybody makes those type of decisions. I, I would like to add, um, if you are scalping, right? I know that you stated that you would probably look to make 100, risk about 70. Ron, I 100% agree with Ron that if you are going to do that, no matter what you're trading, it needs to be a 1 to 3 risk to reward, no matter what. Even if you are scalping, right? As long as you're still following the strategy on whatever time frame that you're looking to enter that trade on, bro, you can still be successful with what you're doing. You just have to make it make sense. If you take a trade, you're looking to target 100 pips. Let's say you don't risk no more than about 30, 35, right? And if you take that loss, okay, that's cool. Get out. But don't continuously like have a set amount of trades that you're going to take for that day because scalp trade, that's in a couple of minutes. That happens in a couple of minutes. So let's say you'll say I'm only going to take 2 scalp trades a day. I'm only going to risk 1% of my account or 0.5% of my account. It really don't matter. You can do a 0.01 and have a 20 something pip stop loss, 100 something pip take profit. That's literally, what I'm saying? That's not much at all, bro. So I'm not against what you're doing, but if you're going to do that, because it may work for you and you may can find a way for it to work. So I know a lot of people that are very successful scalpers. I do. So I would say if you are going to scalp, make it make sense. Use that risk to reward to the best of your ability. Don't risk 70 pips to make 100. That's not going to help you at all. It's going to hurt you a lot more. I would say
Yeah.
definitely continue to find a way to make it work because only you understand what works for you. You know, I want you to understand that at the end of the day, it may not work for me. So what? I'm not you. It may not work for Ron. So what? He's not you. It may not work for me. No. So what? He's not you either. But if you can find a way for it to work and you're successful at it, bro, why would you stop doing what's working for you at the end of the day? What we teach is what we know works. So if you do that and it works for you, great. If you find something else that works for you on a lower time frame, but you're still using our strategy, even fucking better. All right. So I want you to take from this, don't think, this was a way of I don't want you to feel like anyone was attacking you or coming at you. I feel like we were giving you the honest truth and the truth that I wish somebody would have gave me when I first started trading. You know what I'm saying? So I want to challenge you to, if you're going to scalp, make sure that you're putting that stop loss where it's supposed to go. Make sure you're not over leveraging. Make sure you're giving yourself, hey, I'm only going to take this amount of trades in one day. I say no more than two. You don't need to be taking multiple trades. Let's say you take one trade, you lose it, take another trade, you lose it. Be done for the day. Do the same thing the next day. Have a set time that you're going to look to trade it, and you take it like that every single day. And if it doesn't work out, it doesn't work out. But
Uh,
at the end of the day,
yeah.
go ahead.
I've actually started doing that, reduce the amount of trades drastically. And once
Yeah.
I set a win or loss target, and once I reach that, I'm out. So yeah, I'm improving the system,
And,
as I go.
and,
Yeah.
and like I said, bro, if that's what's working for you, then continue to do that. It's stuff that I took from Mino that works for me that I've changed and it works for me. Like he likes to swing trade. I see myself more of an intraday trader. I see myself at times where I can look at the market and decide, oh well, I'm gonna only trade during this session itself. Once this market hits this high of this session, I'm done trading. But Minnie can literally take that trade up to you know what I'm saying? He can take it for more pips. And that's because he has more patience. I've kind of
Yeah.
switched over to the swing trading because I find it a lot easier for me because of my schedule now. I don't mind holding the trade. At
Yes.
first I was just doing intraday and day trades, but now I see I can be successful with swing trading too. If you're successful with scalping, bro, just make sure that it makes sense. That's all I
Yes.
that's all I want to leave you with at the end of the
While
day,
one
bro.
one thing I want to add to, while 1 to 3 is also great, right?
Hmm.
What I've heard from some people is that because of this volatility in the market with this war and news and all of that, a lot of people go 1 to 2 instead of 1 to 3 because things can be based on because of the whole instability in the whole world. Things can turn on you anytime. So you
You can
know,
do
I
that.
want to,
You can do that as well. You can do
yeah.
that as well. But you
Can I
said
just ask you a
100
question with
pips to
you?
risk 70. That's not a
Can
one
I
to
just
two or one to three.
can I just ask one question? When you say you hear from
Absolutely.
people, where are you hearing this from? Like what people and where are you getting this information? I just wanna it I'm just curious.
No, there's a friend of mine who I know have traded for years. I mean, basically just
Okay,
mentioned
and
that.
has he shared his P&L with you?
No, I haven't gone in detail. It was a casual conversation.
Right? Because the
Yeah.
thing is that everyone's going to tell you about their wins, but they're never going. 99% of these people, whether they're traders, gamblers, or whatever, will tell you about all their wins and say, "Oh yeah, this strategy worked," but they're never going to tell you about how many losses they took, right? Because at the end
Mhm.
of the day, you're going to take wins and losses regardless of what strategy, right? The main thing I want you just to focus on, like Zay said, the strategy you want to do is whatever strategy anyone on this call wants to do is completely fine, guys. We're not holding a gun, but what I want you to know, regardless of what you do, risk management is the number one thing you want to focus on. That is one thing you cannot cut corners on, or you're going to blow your money. And the longer you do it, the harder it's going to be able to set up that bad habit and break it. Right? Talk even any of these gurus you hear on YouTube. The number one thing they say is risk management. I just don't want to see you doing a 1-to-1 because
I
over
really
the
do
long
one to one. Most days I one to two. I do. Sometimes I go one to three, depending on the market still. But I really do. I was just giving you an example there, to be honest.
run,
Yeah.
I don't want to see you guys like fast money comes and goes, guys. It's scary, right? Like Mino's the first person to say like there's tons of people who blow accounts left, right, and center, right? And then they're wondering why it's happening. It's because you're over leveraging on either taking too many trades or risking too much money or you don't have the right risk to reward ratio. Yeah, you might hit one or two of them, but you're setting yourself up for failure, right? And that's why I asked you how much of your account you lost. And if you've already lost 50% of your account, I would rather take a little extra time getting it back to break even and then upping my lot sizes as it goes up because you're
Well,
giving your chance.
what I've done still, repeatedly, I built it up to the level, repeatedly, and then got it back down. So I've been in that cycle. So I'm trying to get out of that cycle. Yeah. So that's why I'm trying to refine it and get it better.
I said it like I said, the best thing for you to do is make sure you're doing a one to three. I know, like you said, most people say a one to whatever, whatever. That's cool and all, but a one to three,
Mhm.
one to three. No matter what you're doing, do a one to three. I rather you do a one to three than win a 1-to-1, 1-to-1, 1-to-1 over and over. And then you feel really confident, and then you go crazy on the last side, and boom, everything that you just won, you lost. Just go one to three, 1 to 3 minimum. You can literally find you can get in gold and do 100 pip take profit with a 25 pip stop loss. I mean, because you got to think about it. The time frame that you're looking at is what you're targeting. You're not targeting. If you go to the 5 minute for an entry, guess what? You need to get out of the 5 minute high if you're buying. Or if you're looking at the 5 minute for an entry, you need to get out the 5 minute for what I'm saying, 5 minute low you stick with the time frame, follow the chart, and
Yeah.
use a 1 to 3 risk reward.
I,
But
I have done 50 pips and 30 pips too before I get away with it. I didn't get hit too. If you know if the direction is strong in that direction, it's moving strongly, you can get away with it. Yeah.
yeah, you could. I mean, you could, but just mm, you got to make it make sense. Like what we teaching, what we giving, it works. It works. It works. It works. You might take a loss here and there, but at the end of the day,
Yeah,
this
I'll
shit is
add something
successful.
as well. Yeah, add something as well. I totally agree with Zay. Just do what works, but make it make sense. But in my opinion, when I started my trading journey, if I had someone to actually lay out a blueprint and it shows me that actually his blueprint actually works. I just follow it. You know, I mean, I would not be trying to build my own, strategy and go through all the losses, because the point of paying for someone to mentor you is to learn from their mistakes, right? So, that's, if I was in your shoes, I'd literally follow the system and get to the position that I'm trying to get. It's really that simple, to be honest. But that's just my opinion, though.
Yeah,
I
I'm
love
gonna
that. I love
start
that
doing
opinion.
some more back testing. I mean, get onto that type of thing to do back testing, because I haven't done much of that really, but I'm gonna start doing that more now, more time dedicated to, gaining knowledge and practicing, and less trading time. Then yeah, something like for now, for the time being, that's the plan.
I'm gonna share this. This for everybody on the call. I used to counter trend trade really bad, and I basically was giving my money away. And that's just like me. Like that's just like me. No, handing me a gun and say, "Yeah, bro, it's one bullet in here. If you shoot it, it's only one bullet in here." And I'm like, "Oh, let me see. Let me shoot it." And I shoot the gun, and I'm like, let's say like he hands me a gun and say, "Yeah, bro, it's loaded, bro. It's a bullet in there." And I'm like, "Let me see. Let me shoot it." Just 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 to see if what he's saying is true. And I shoot the gun. Boom, it's a bullet in there. He like, "Bro, I just told you. Why would you do that? I just told you." And I'm only saying that because if I don't, I want to say this in a way that I don't want to offend anybody. You know what I'm saying? I had to find a way to put my ego to the side to listen to what someone who's doing what I want to do or who's successful at something already. I had to say, okay, obviously this shit is not working for me. Let me listen to what this individual is saying to see if this works. And if it works, then I'm going to stick to doing that. I can literally say I've made way more money by just listening to Mino telling me don't counter trend trade, just trade in the direction of the trend. Because it used to be at times where I would say, okay, I have the fib at the 100 to 0%. I'm waiting on the 61.8 retracement. I would sell that shit, thinking, oh, I'm gonna sell it to the 61.8 so I can buy it when it get to the 61.8. That was the dumbest thing ever. I used to get cooked every time, right? When I changed from just trying to sell to the 61.8 so I can buy it, I realized how easy it was for me to just wait for the market to create a low, high, high low at the 61.8 and buy it. I just started making so much more money. So I want everybody to take away from this call tonight or what we just discussed is that if someone who is successful at doing something tells you to do something a certain way, please take heed into what they're saying. If what you're doing is working, not working, working, not working, and what they're doing is working, have enough, I guess, pride, ego, drop it down just a little to listen to someone that is actually successful at something that you're trying to be successful at. And that was the biggest thing for me, that I was very stubborn and hard-headed that I was just like, nah, I'm just gonna keep doing it this way until I got to a point where I just kept blowing accounts, losing money. And then when I instantly switched, withdrawals, payouts, withdrawals, payout, using my trading money to pay bills. You know what I'm saying? Things started changing like that. And that's what made it click for me to say, nah, I'm cool on the counter trend trade on. I'm cool on the little small intradays or closing the trades and not holding. Like it started to make sense because for one, I felt more comfortable. I felt more confident. Because when you take losses, you're gonna think that you don't know how to trade. Every time you take a loss, you're gonna be like, "Damn, man, I don't know I don't understand this. It don't make sense to me. I can't figure this out. I can't figure it out." You're gonna put yourself in a bad psychological trap thinking that you don't know how to trade. And it's not even that you don't know how to trade. You just don't know how to follow rules. You just don't know how to be disciplined. That's the only thing it is. It's not, I'm pretty sure it's a lot of y'all on this call right now thinking, I don't know how to do this. But if you really sat down and followed exactly what we teach, no matter what time frame that you were doing it on, if you literally paid attention and you followed it, guys, you will notice that you do know how to do this, but losses are going to happen regardless, right? So I want all of you guys to really like take heed into what this whole call tonight. Like Jermaine, I cannot thank you enough for sharing what you shared today. Because, like I said, you don't know who needs to hear that or who needed to understand the importance of risk management and why it's so important. You know what I'm saying? As quick as you get the money trading, you can lose it just like that. But if you use proper risk management, you're not going to stress about taking small losses or taking losses because you still have money to trade the next day. It's been plenty of times where I got in a gold trade on a Monday, lost the trade, and then fucking by Friday, the trade went and blasted through my TPs. And guess what? I couldn't even get back in the trade because I done blew the account. You see what I'm saying? So use proper risk management at the end of the day. Make sure your risk to reward makes sense. Don't over leverage. It's probably like Ron said, it's the most important thing, guys. Like literally, it's the most important thing ever. A lot of people just blow accounts and feel like they don't know how to trade. No, you just don't know how to follow rules. It ain't that you don't know how to trade. You know what a high and low is. That shit is very easy. I don't care what nobody say. Looking at the chart and figuring out highs and lows is very easy. That's once you get it, you get it. That stays. Now, once you get into a trade and start playing with the lot sizes and all that, that's what's hard. That's the hard part. The highs and lows and understanding the trend line and all that, that's very easy once you get it. But what takes a while to get is the risk management and the psychology of trading. That's when it gets hard. Technicals is easy as hell. You versus you is the hard part. Right? I don't mean no say I don't know if you said you wanted to mark up charts. I know I personally have to hop up off this thing, but I don't know if
I'm tired now,
you
man.
know, yeah, man, we've been on for a good little minute.
Wait a minute, I'm tired.
I will mark up a chart before I hop off though, only because I do want to do a TA for y'all. Um, really quickly, it's not gonna take long. I'm really just gonna mark it up. Hopefully that can be a trade that we get into this week. But
Zay, can you
before I
do
do
you
that,
see?
yeah, hell yeah. I've been trying to get back on UC for a little minute, so yeah, I'm down to do UC.
Yeah, I'm seeing something on you.
But
See what you see.
any questions before we get started, y'all? How do y'all feel about everything that we discussed? And like I said, Jermaine, I appreciate you, bro. After this call, message me. I wanna um I wanna chat with you another time as well. We gotta get that right for sure. We can't be risking 70 to get 100. We ain't gonna do that. We're gonna get that right. But I thank you for, sharing that and, being able to actually listen and take heed into what we were saying. But I needed that when I first started trading, man. I was just going in there dropping dollar lot sizes with a $20 account and wondering why I was getting stopped out every time. I ain't had no money
I
in
have a
there.
question
I'm
for the
blowing the
group
account like
before
crazy.
Zay does his markup. For anyone who can relate to what just was discussed and went through, anyone who's been there or relates with it, can you put a an R in the chat?
I might have put two R's. Shit. I know. I still deal with that sometimes to this day. I ain't gonna
Right?
lie to you. I
So I
keep it
just
100.
wanted you to know that everyone's been there and there's probably people there. So once again, I thank you very much for sharing it. And please, none of that was a personal anything towards anyone. I do appreciate you guys. That's why we're here is to learn. So please don't take it personally.
Nothing taken at first thought, man. All right.
All right, guys. So I'm gonna real quick. I'm gonna mark up USD CAD. Um, I mean, if anybody, I ain't gonna get y'all to walk me through it because y'all know how I do. I'm just gonna explain what I'm doing. First things first, I'm just gonna look at the current candlestick. I'm gonna look at where I'm currently at in the market, and I see right here. Why is it a vertical? It's supposed to go. I mean, why is it horizontal? I only go vertical. So current market, bro. I'm not tripping. Vertical. Dang, can I not go vertical? Okay, anyways, current market is right here, guys. So what I'm gonna focus in on right now is I usually tell you guys to focus on the highest and lowest point of the chart. Um, but I want to get as close as possible to right here. So all I'm going to do is, according to what I'm seeing right now, of course I see all of this, but I'm going to place here, 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 here. Okay. So I'm basically just going to the key levels like this low, this high, this higher low, this higher high, this higher low, this lower high, higher low, or equal low, and then this basically a high that broke above here. So I like that. I like that we broke above this. So I can kind of already have an idea of what I'm looking at for now. So based off of this, I'm going to go ahead and remove this because this is all the way down here. Not really my main focus. And this is way up here too. So I'm not going to focus too much on that either. But I'm looking for market to eventually come up in this area. But either way, low, high, higher low, higher high. I'm going to mark it up so y'all can see. Um, it's all just pretty much the same. I ain't gonna hold you. Um, let's go move this up a little bit. So all that's pretty much the same. Low, high. Let me go ahead and oop. Low, high, higher low, higher high. I ain't really about to focus all the way up here. Really, I could put it on, but you got to break through here first. And this would be like an area that I'll probably look to target. I'm looking for a buy. I ain't gonna hold you. But anyways, so I'm gonna remove this real quick. So the reason why I drew this is because I see that this was a resistance. We broke this resistance, came back below it, came back above it, came back below it, came back above it. So I'm seeing that we like to play around in this area right here. But right now, it looks like we might be trying to respect something in this area. But from what we have here, we could possibly get like a deeper retracement. I'm going too far ahead of myself. Um, let's look deeper into this. So low, high, higher, low, high, high, higher lows in this area that we're here. Okay, so based off of this trend, what type of trend would you guys kind of say we're kind of in with UC right now? Like a whole lot of it look really choppy to me, but overall, what type of trend would y'all say we in? Let's go right here. Let's just focus on this part. What type of trend would y'all say we in from here? Uptrend. I personally think uptrend as well. I do. Um, because of what I'm seeing. I'm thinking uptrend. So I think uptrend as well. All right. But what I want to do now is I noticed that I have this higher low, this higher high. So basically I'm still inside of this move pretty much. I'm still inside of this right here, ultimately. Um, all of this is still from here to here, all of this right here. So now what I'm trying to do is get closer to market. So from here, I understand, and I'm just going to take this back off because I want to make sure I'm cleaning this chart up. But from here, I have this higher low, this lower high, this higher low, lower high, higher low, higher high, higher low, higher high. So from here, my focus now, and I'm gonna take the rest of this off. I just do all that to get an idea of what's going on of the market. But from here, I see this level of support, and then of course this major resistance here. But we got to go above this area too. All right. So I'm personally looking inside of this. I'm seeing that we are breaking this. So we're breaking above this, you know? And all I pretty much want to see, we're gonna hold that. I would love to see some type of high low get created right here. Um, but this is like free fall right now. Like there's nothing that will make me say until market creates it itself. But I have nothing to confirm if we're going to um other than this part right here, this resistance that we broke right here. I have nothing pretty much to confirm that we're going to continue pushing in that direction. But I'm looking at basically this. So we already done broke here, right? We got here, we done broke. If I drag this, we done broke through this resistance. We done broke through this resistance with this. Now, my question is, where exactly are we trying to come? I potentially see like I'm just gonna say I see buys, right? I see buys on UC. Um, yeah. So if I'm a trend line cooking one, two, three, four touches. I see buys on UC. What I would love to see, and I'm just drawing zones here, guys. These are just zones. Give me an idea of where we should be like hitting and rejecting off of. I'm seeing a nice rejection potentially here. But I don't can't give you 100% clarity on that yet. But I'm gonna feel it from this low to this high. Okay, so that's my daily. All right. So let's take all this stuff off, cause let's get to the nitty gritty. You know, let's get to the nitty gritty, huh? Let's understand exactly what we're looking at, what we're looking for. Any questions so far? What we got going on right here? Any questions? We Gucci. Let me know.
I'm looking at it right there, and I'm seeing where it broke the resistance, but
Mhm.
I don't see any confirmation that it's technically going bullish because it could go down, right?
Right.
But
Yeah, absolutely. Yeah, I don't have confirmation yet either. That's why I'm about to drop to a lower time frame now. Because I have an idea. I have the idea of what I want the market. Not necessarily what I want the market to do, but I have an idea of what can potentially be. I'm looking nice retracement to buy it, but I'm also looking, market to like give some type of maybe like a deeper retracement to buy it as well. So I'm looking to look for something in this area. But again, that's why we go daily to figure out which direction overall we're trying to go in. And this could potentially be, market literally sweeping this. But like I said, I've seen higher low, higher low, higher low, higher low. So I'm going based off of this higher low, this higher low, this higher low, higher low, higher low. So this is the last higher low we have. If we decide to break below here, then we just gonna continue selling off. But right now, if I was to take a sell, I would be selling all the way here when market started selling here. And if I was to take a buy, what I'm saying, market done bought from here. So I need to confirm, do we have a higher low? If I'm looking to buy, it makes more sense because I could potentially be buying at a higher low. If I'm looking to sell, it wouldn't make sense because I'm not buying, selling at a lower high, if that makes sense. Like I'm not selling at a high point right now. I would technically be trying to buy it at a low point because of where I'm at. If I was looking to sell this, I would probably be looking to sell like basically this would be a high point. So somewhere like right here. I would like to see market, for an example, like it did break below it, retrace, and then sell off into this. If I was looking to take a buy, I would like for market to show me exactly what it wants to do. You know what I'm saying? Let's say if it does one of these moves and then this, I would like to see market come back and retrace and continue up. Like I can't really give too much of what to do from here. I'm just gonna go to the next time frame, 4 hour, and voila. So off the 4 hour, right? What I'm seeing, and this is very important. I'm seeing all of this is the same to me. All of that is the same high, high, high. All that triple top right there. Then I'm seeing this high. This is the last one it gave, and then this low. From this high, this low, this was the last lower high. Well, not last lower high, but this was the lower high that it gave. So we're gonna place that here. And then market gave this lower high, right? So lower high, lower low, lower high. You can say this is an equal low to me. So that's an equal low, right? So I'm gonna go, I'm still gonna be mindful of this area right here. This is like a lower high too. And then down here, lower high. So all of this is still lower highs right here. So if you're looking at this chart, man, does it make sense to get in for a buy right now? Because according to this, what type of trend is this?
downtrend.
Downtrend, which is not, we can say it's a downtrend and it could potentially just be the retracement right now. This could just be a retracement of this overall move, which makes sense. You know what I'm saying? From this to this, we're looking for some type of retracement. So that doesn't confirm any buys just yet. What confirms a buy, right? Or what we will be looking for, as long as market is creating, and I'm gonna just give you the overall thing that I'm seeing, as long as market is giving lower lows and lower highs, I want no parts of that right now, right? So as long as market is doing, you can tell this is a downward trend right now. Market can continue to do this all day long, all day long, all day long. Do y'all see that? It can take a long time. Market can continue to do this until market breaks one of these lower highs right here, kind of like it did. You know what I'm saying? And then it came right back down. That could have been a loss. You know what I'm saying? But initially, as long as, and I hope it doesn't do all this, but it's a possibility. Market do that, right? I would love to see market kind of come in this area and do that. I don't want to see all this happening, but I want to see it respect this trend. But basically, what I'm trying to get y'all to understand is that as long as this is giving lower highs and lower lows, we're not looking for no buys. We need to see market decide to break above one of those lower highs, potentially something like this, in my opinion, right? Because I was dragging it, drawing all that. But I want to see market do something like this. I ain't even go that crazy yet, but let's say something like this, right? As soon as we get something like that, guys, I want y'all to understand that we have this low, this high, and then we begin these lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then we finally got a break above a lower high. What I want to see market do now is come back down, right? I would love to wait for it to just be at the 618 to enter the trade, but what I would prefer to see this bad boy do, and it don't matter what I do with that, right? As long as it's at my 50, 618, preferably my 618 level, right? I would like to see it retrace back to where it just broke out from. And then, me personally, I would like to place that stop loss right below this area. And I would like to target to that previous high. Oh, sorry, that previous high. Or I could target that new high, right? So of course I will adjust it accordingly, you know what I'm saying, to where I'm at in the market, the stop loss and all that. But looking at that, that's a 128 risk to reward. Yeah, that's a 76 tip stop loss. I'm pretty sure I will probably find an entry that's a little bit more crispier. So I won't even have to risk 76, maybe like no more than like 50 or something like that. But taking this trade it would make sense if market played out in this type of fashion. I will be okay with taking this trade, and I probably wouldn't even, you know what I'm saying? I would probably be looking for market to give me that, and the stop loss has to make sense. So I'll probably go somewhere like 50, but I would need all the confluences. I would need like a fair value gap or order block, some extra additional stuff on the 1 hour to get me in this trade. But as long as I see a breakout, right? And this could be trending down, trending down, trending down, and I go to the 1 hour and we get that breakout. Of course, you know, this right here will be considered like a red candle, right? And then this will be considered like a green or blue candle, and potentially, of course, market will still be giving me, some more greenish, you know what I'm saying, coming out of it here. And then I'm looking for is like some type of like pattern or gap to get in here, potentially fair value gap, order block, bullish engulfing, like which we kind of have right here to enter, place stop loss here, enter trade somewhere right here and get in, or just wait for it to come back above the 618, let market do whatever. And then let's say we close up here, then enter the trade and place your stop loss below here. It's multiple ways that you can potentially do it, but what you need to wait for is a break of that retracement trend line. That's the main thing, right? This is kind of like what I would be looking for. Like I said, a break of the trend line, because we already done got the liquidity because we done swept the damn we done pretty much went way below than where we were supposed to. So I'm pretty sure some type of liquidity sweep has happened in this area or will happen. And then all you need to wait for is the break of the trend line because that's how you avoid the liquidity sweep. A lot of people say, well, how do you avoid it or how do you not get swept out? Well, it's kind of hard. You can't really avoid it, but your best probability or way of avoiding it is just letting the market do this bull crap. And as soon as it breaks above, right, and retraces, then you look for the entry. I'm not like you can jump in straight off the breakout, right? It might continue just pushing up. That's one way you can do it, or you can wait for market to retrace back to confirm we are going to hold at this level, and then you can enter the buy, take the buy, place your stop loss below this area, and then ride it all the way up. You know, there's multiple ways that you can enter the market, but if you don't get a breakout or a break of this retracement trend, you don't enter. You have no entry. You have no confirmation, right? Not gonna say you can't enter here and then it starts going up. Hey, good. But for me, I need to confirm if we breaking a lower high on this retracement before getting into this buy. Okay. So for UC, um, this is my thought process on it. You know what I'm saying? Right now, I'm still looking for a retracement right now. I don't have to, I'm removing everything because I don't want to cloud my judgment right now. But um, yeah, right now, what's the 1 hour? I don't have nothing. I can remove all of this because this don't matter. The last lower high is right here. So for now, this is a waiting game. In my opinion, it's just a waiting game. And I'm just taking all this declutter off my chart. But right here is what I'm looking. I need to see a nice, and let's say market don't even decide to come to this trend line. All I need to see is a break of a lower high. I would prefer at this level right here. I would prefer markets just come here. I'll prefer to get an entry here. That's what I would prefer. And I would prefer to just have my stop loss right below here. That's exactly what I would prefer. Potentially might be at the zone. Maybe I get like a 50 pip. This is what I would prefer. Full motto, right? I can't tell the market what to do. I just need to wait for market to break a lower high. Let's say market create that lower high, down some more. You know what I'm saying? Do one of these funny business.
Would it make sense to put the max TP right at the first line of resistance there?
You could. I mean, as long as you have a 1 to 3, and that's still a, you know what I'm saying? That's still a one to
Yeah.
three. So yeah, you could do that. Yep. Hold it up. It's like
Suppose
I said, it's long.
suppose you when you if you put your TP there and you don't do 1 to 3, you don't take the trade.
Yeah, if I don't have at least this right here, I'm not even gonna take it. I need to at least go for this minimum because that's another piece of structure that the market can respect too. As long as you have a 1 to 3, right? Because you see how I'm targeting all the way up here. That's a 1 to 12. That's a swing trade. Right here, I could be targeting this. That's another swing trade because I'm trying to swing to another high. If I'm start doing anything lower, now I'm getting to intraday, right? Because this is a swing high. That's a swing. That's a new high. So I'm swinging to here. That's a swing. I'm going to here. That's another swing. Anything below here, I'm not swinging at another high. I'm in a lower time frame, yeah, but this is a swing. That is a swing. Anything lower than that, then I'm not swinging. Now I'm intraday type of day trading type. And this is more, of a because you can think about it, 180 pips. You're gonna hold that trade for a few days, maybe. Maybe let's say if you go 155, you might still be holding that for a few days because it's 100 and something pips, or news might push it up. You never know. But depending on the pip count, right, will determine what type of trade you in. Let's say if I do like a 50 pip, that's definitely like a intraday, something small like that. Quick little intraday trade, but that's a one-on-one. You know what I'm saying? That means you would have to have like a 15 pip stop loss or something like that. And that's easy. I mean, you can do that too. You can definitely catch that type of trade off of that. If you go to a lower time frame and you break a lower high and you look for a retracement, well, guess what? If let's say if we get on that 15 minute, right here, for example, right? If 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 we were to look to if the trade was ready and everything makes sense, let's say if you see this right here and you looking to get in this trade, if you were to take this, right, for someone who's looking to scalp or something, if market came here, and let's say it came down to your level, let's say if you're looking like this, right, and it came down to your level on the intraday style, because you're still following low, high, higher, low, higher, high, right? You're still following, and market comes and do one of these moves, right? And now you look at, okay, I'm gonna look to get in this trade, and you say, okay, we just broke this area right here. I can get this entry right here. I can place my stop loss below this area right here. Let's say you go 10 pip stop loss and you go target this area. That's what you have. You have like a 1 to 3 risk to reward. You can get those type of trades if it makes sense. I personally probably wouldn't look to target anything higher than that. because you don't know what the market is going to do from there. Market can literally create this lower high. Let's say you go 1 to 3. Market can literally hit your take profit. Let's say market go and hit here and then come right back down, right? Come right back down, get us in that trade, and then we gone. So I'm not saying that you cannot get your trade that you're looking for. It just has to make sense. In this case, it would have made sense for you to say low, high, higher, low, higher, high. We just broke these lower highs right here. Market retrace. If market respect this level, and let's say we do get like a sweep or something like that, or you see that market is now again, be mindful. This is a retracement. So it has to break a lower high, right? To get an entry. I mean, it just has to make sense. So that's like I said, that's another way. But for me, I wouldn't even be getting into this trade just yet because we haven't gotten to our 61.8. And we on a higher time frame, we haven't broken, you know what I'm saying? A lower high. But on the lower time frames, we have. We have. See right here, we didn't break a lower high. See right here, we didn't break a lower high. We didn't break a lower high. We didn't break a lower high. Then we break a lower high. We break a lower high. We retrace a little bit, but we didn't give a full retracement. So by the time you would look to get this entry here, guess what? It lost. That's why I don't trade lower time frames. That's why I don't scalp. Because just like this looked really good that we broke these lower highs. We were looking for a retracement that happened up in this area somewhere. And look what happened. L. I prefer the higher time frames. Lower time frames, you get so cluttered up in this little mess, and you think, oh, it's time to get in this trade. No, it's not. That's why I don't scalp. That's why I don't encourage scalp. That's why I don't recommend it. You know what I'm saying? So when I look at the higher time frames, it makes sense because the last low is all the way down here. The high is all the way here. We're looking for another higher low. So of course, market got to drop down to give us the higher low and the higher time frames. That's why we focus on the higher time frames only. So yeah, that's the reason why I really don't. I'm not fond of taking scalps. Now, if you're going to take a scalp, like I said, it has to make sense. If the daily, we're looking for a high low on the daily, that means you need to be looking for sales on it while you're scalping because you're looking trying to target where we're going. If the people on the daily are looking for the market to come here, why on earth would you be looking to buy early? It ain't got here for the people that are actually holding the trade for a long term. You should be looking for sales only. Every time market create a lower high, you sell it, sell it, sell it, sell it, sell it until it gets to this area where the people want to buy it. And then once they get to the area, you get out because you know when them people get in for the buy, they're gonna push that mother up. So that's how you gotta look at it. If you know that everybody else on the higher time range are looking for a higher low to be created down in this area, then your trades need to be straight sales because that's what we're having right here. Straight sales right now on the lower time frames. But even if you're scalping and you're trying to trade in the right direction, then you need to wait for people at the daily to get their high low, and then you go to the lower time frames and then ride that wave up. You should be perfectly fine. I think that's what you meant by taking a scalp to a swing. When the daily lines up to whatever time frame you're looking for on the lower time frames, and you place your stop loss in the same area that we have, and then you take a trade. But that's not really like a scalp. That's just a great entry. Because if you're riding it all the way to where we ride it, it's not a scalp. Yeah. That's just all I'm looking for on UC. I'm looking for um sorry. I'm looking for the lower highs to be broken to continue bullish. Any questions? Or we hop off for the night. We all good? Everybody straight? All right. I think this was a really productive call, man. Let me go ahead and stop this recording. But